Wild swings in the Bitcoin price as well as the stock market. Let's get into it. Welcome back to the Bitcoin Layer. I'm Nik Bhatia. The last few days have seen some roller coaster moves in Bitcoin as well as the stock market. So let's talk about what has driven the price. Now let's start with the stock market because we have to keep in context global macro. That's what we do at the Bitcoin Layer. It's Bitcoin and global macro together. And when we see Bitcoin's price move over the last several years, we empirically have proven to ourselves that interest rates and stock market correlations are some of the primary drivers. So we cannot ignore that and just look only at headlines out of the Oval Office. The stock market was down 1% last week, and the week before down another 1.5%. So we are in a period of stock market weakness, and on my trend line here, I see stocks bumping up at their support level. So a very important area for risk assets broadly. Now, our own metric TBL liquidity is responding somewhat nicely to the fall in interest rates. We do, however, see an uptick in bond volatility despite falling interest rates, and that's something we are watching very closely. If that is something that's interesting to you, I recommend you guys go check out becoming a TBL Pro at thebitcoinlayer.com/subscribe, where we get into the quantitative side of Bitcoin, especially with these cross-asset correlations and cross-market drivers such as liquidity, bond volatility, and interest rates. So with Bitcoin correlated to the stock market, and it rolls through time. Sometimes there are periods where they're more strongly correlated and less strongly correlated, but generally these two assets like to move together. With stock market weakness, we can expect, all else being equal, Bitcoin weakness. Now, Bitcoin is down 8% from the close of this week, which is on Sundays here in the Bitcoin world because the market never closes. So weekly candles on exchange data, it strikes on Sundays as opposed to a futures contract in Bitcoin, which would strike on a Friday afternoon. Anyway, the Bitcoin price today is down 8%, so the weekly candle is down 8%. Now, last week, which includes the weekend price action, Bitcoin almost had no change despite touching levels around $80,000. This is because over the weekend, we had another Trump headline about the strategic Bitcoin reserve, and should I say strategic crypto reserve. So let's pause the Bitcoin price action for a second to talk about Trump and to talk about the strategic Bitcoin reserve. It is my goal to convey to you today, you will be chopped around if you're going to try to trade headlines on the strategic Bitcoin reserve. You will see, and we saw this during Trump 1, we'll see it during Trump 2, the tweets, the social media posts, that is what moves the market because the algos are now plugged in to those markets. They understand that news, whether it's on tariffs or strategic Bitcoin reserve, those news items will come via social media. So what you will see is more volatility around Bitcoin and the stock market and interest rates, all because of who is sitting in the White House. I was on the desk during Trump 1, so I know what this is like to have to watch the headlines and to also watch how trading algos across global macro are tapped into basically the Twitter feed to see what is the next headline, who's going to get hit from a trade perspective or a tariff perspective. Now, on the upside for Bitcoin, a strategic reserve will bring a new buyer to the market or an established holder to the market. This will be a good thing for Bitcoin, but the news of Trump being elected in November, and I will even include the run-up from November to January, that entire move is what we call pricing in the news. So the news is that Trump will be pro-crypto, pro-Bitcoin, maybe launch a strategic Bitcoin reserve. The price adjusts very quickly to things like that, and that's why we saw Bitcoin go from 70 to about 110,000. Now that the news is in the rear view mirror, the price is consolidating and waiting for the next source of demand, because the markets go more quickly than the actual buying in the market. Meaning, if the USA is to start a strategic Bitcoin reserve and even start buying Bitcoin, I believe that buying of Bitcoin will actually somewhat top tick the market for this cycle, as participants are accumulating Bitcoin to sell it back to the government at a profit. That's the short-term and even medium-term minded investor. So we should expect, first of all, for the US government not to be a spot influence on Bitcoin demand anytime soon. The price to be very responsive to headlines from Trump around the strategic Bitcoin reserve, and to expect a lot of nothing in terms of things happening. So what do we know? We know that there's a working group that has a 180-day deadline to submit a paper. That basically means that until July, August, all you're going to hear are rumors of what might happen or ideas of people that are associated with the project. Nothing material will happen until those reports come back to the White House, until they go to the Senate, Senator Lummis, the finance committees on Capitol Hill. All the players need to express their opinions and to get involved. That's what the representative process will hopefully deliver to us, not just some shit coinery, meme coins, and made in USA crypto reserve. All of that, all of those headlines will chop you around if you're going to trade. But if you zoom out, what you will do is you will wait for the paper or the reports to come back from the working group to then make their suggestions. Then, if it includes, let's say, coins that you might not be in favor of as an American, then you will get to voice your opinion. Whether or not you will be heard is a separate issue. What will be more important is the size of the lobbying efforts on both sides. We've spoken to David Zell at the Bitcoin Policy Institute. We know that there is a pro-Ripple investment being made from a lobbying perspective in Washington with regard to this strategic reserve. And so you have to expect politics to continue to play out. What will the Bitcoin price do? Well, right now, if you look at the candles from 110 now down to 80, it's a 30K range, which is great for one reason. It sets the next move up to 140. That becomes the new target on a 30K consolidation range. Now, how long could the consolidation range last, or could it go even deeper? That is to be said. But I do expect the areas around the 80s to hold up during this current cycle. And yes, demand will have to catch up, or the supply of people coming onto the market and saying, I'm out because the strategic Bitcoin reserve doesn't look like it's going to be a thing in the next 1 month, 3 months, 6 months. So I'm out because that's all I was in for. To be honest, I feel like some of the move over the last week or two in Bitcoin is that capitulation trade. Join me for a free online event on Monday, March 17th at 11 a.m. Central. The event is titled Death, Taxes, and 21 Million. Protect your generational wealth before time runs out. Discover why Bitcoin is the ultimate scarce asset and why protecting your share of 21 million through tax strategies and careful inheritance planning is so important. We'll talk about why Bitcoin's 21 million brings certainty to an uncertain world. And with April 15th fast approaching, we'll go through those tax strategies and what IRA products you have access to with Unchained. Discover inheritance solutions like trust vaults and multi-sig. And also, if you have an advisor like a CFP or an attorney, make sure to invite them along so they can learn about tax strategies for Bitcoin with you. Go to unchained.com/TBL for all the information. Don't write your seed on paper. It's estimated that so much Bitcoin is lost forever, and the main culprit, the main reason is poor seed phrase security. This is why we use Stamp Seed, a DIY kit that enables you to hammer your seed phrases into titanium plates using professional stamping tools. These plates are heat resistant up to 3,000 degrees, fireproof, crush proof, and time proof. They're compact and easy to hide, and they can be used in your single sig or multi-sig setups. Make sure you go check them out today at stampseed.com and use code TBL for 15% off of your order. Now back to the stock market really quickly. Stocks are at a support area, and I would say a somewhat important one here. So stocks need to hold on to this level, or it opens up more downside across risk assets as a momentum trade will hit the market from a short side. So those are the things that we will be watching at the Bitcoin layer. Remember, if you want to become a TBL Pro, thebitcoinlayer.com/subscribe for that more up-to-date quantitative research. Now back to the Bitcoin price. Bitcoin is down 8% today, but it was up 8% yesterday on a Sunday, on a weekend. Now this is, while it's a volatile move, I believe it's a good thing because now we're getting a lot of digestion in this area, and the market, as it consolidates, it gets used to these higher prices. So all of the grind above really the last area of consolidation, which was 50 to 70, any consolidation above that area, so between the 80 and 110, is healthy for Bitcoin over the long term. It raises that realized price as coins exchange hands in the market at these higher prices. Remember, realized price is still in the 40s. And as realized price rises, which is this on-chain cost basis that we use to really give us a sense of Bitcoin valuation, as realized price increases, it also raises the floor for Bitcoin holistically, because Bitcoiners that are in the market at 40K, at 50K, at 60K will defend that level, as well as not relinquish coins below that price. So realized price is an important metric. We don't want to see Bitcoin ever getting too extended from realized price, because that brings in the prospect of heavy profits and therefore profit taking, which can cascade into a big bear market move off of the back of a big bull market move. So valuations, we want them to stay fair. We want them to not extend to 3, 4, 5 times the realized price, because that opens up the new selling. We did see Bitcoin get to this 3 times realized value mid last year when it hit the 70 area for the first time during this current cycle. But ever since then, Bitcoin has just inched slightly higher, but its realized price has charged higher. And this has brought valuation down to a much more fair area. So a healthy consolidation, if, and I mean, importantly, I stress if, Bitcoin can consolidate in this mid 80 to 90 area. How long could it last? Actually, on my chart, I have a wedge that resolves somewhere in mid-April. So this current period of consolidation could extend a lot longer, but we should see some dramatic price action here sometime in the next month. If Bitcoin is able to escape to the upside of this wedge, that just means that we have to establish a new range of consolidation or find its new equilibrium. That doesn't necessarily mean that it's off to the races for Bitcoin just yet. I find it interesting that the dollar is down 1% today, despite a tariff headline environment and weak stocks. You would expect that the tariffs would cause a stronger dollar, which would cause a risk-off move, resulting in weaker stocks. Instead, we're getting weaker stocks alongside a weaker dollar. That brings into the conversation this topic of a Mar-a-Lago Accord, or a currency accord to keep the dollar from strengthening too much. This is something that will be a major theme all year at the Bitcoin layer, and we want to make sure that you know we are watching it. Lots more to come in March, as well as the release of my book, Bitcoin Age, which I'm very excited to deliver to you guys. It's been a long time coming. Thanks again, and we will catch you guys next time.